Everyone, thanks for joining us early. Let's wait for another minute or two. PM Singapore time. Mr. Calvin, Nathan, and Mr. Neeraj, once you're ready, you can turn on your camera and the mic. It's now 7. Good morning, good afternoon, and good evening, everyone. My name is Shiqi, representing Saxo Market Singapore, and also your moderator for tonight's panel discussion. First of all, a warm welcome to all of you, and thank you for joining us tonight from all over the world. Before we officially start and introduce the panel, just a few house rules to take note. At the bottom right side of your screen, you should be able to see a chat function there. Please use this chat box and in the drop-down, select all panelists to reach out to us if you have any questions for our speakers. We will address a few of them during the Q&A at the end of the event. So now please make yourself feel comfortable, enjoy the discussion, and interact with the rest of my team on the panel via the chat. So this is a disclaimer as usual. Please note that the content of the event are based on general knowledge and a factual market outlook, which are not meant to be financial or investment advice. I'm happy to share with you that today's content is brought to you by Saxo Markets in collaboration with Polestar, Nikko Asset Management, and MSCI. I'm honored to have 3 distinguished guests on the panel with me today. They are Mr. Nathan Forshaw, the President and CEO of Polestar China and Asia Pacific, and Mr. Calvin Neo, the ETF Business Development Director at Nikko Asset Management, and Mr. Neeraj Kumar, as Executive Director in the New Product Research Team at MSCI, to discuss the revolution underway in the transportation industry, the electric vehicles, and also the future of mobility. A warm welcome.
Thank you, Shiqi.
Thank you.
So stepping into 2022, we do notice that the ride-hailing apps are now more common, lithium batteries are cheaper and safer, and the cost of owning electric vehicles is getting closer to owning a regular vehicles. The march towards autonomous vehicles is gathering pace, and the cost of incremental innovation is falling, while the world is more united than ever against climate change. Smart cities can lead to higher quality of our daily life, but if all stakeholders can work together. The mobility services can become key in tackling 2 of the most pressing issues of urban life. One is carbon emissions, and one is overcrowded cities. And in Singapore, we also aim to phase out the ICE vehicles and have all vehicles run on cleaner energy by 2040. As new electric cars enter the markets almost every month in Singapore, this electric revolution is gathering momentum. The Swedish automotive brand Polestar, focusing on high-end electric performance cars, has also made its first debut here with the introduction of its all-electric Polestar 2 since December 2021. And so now I shall invite Mr. Nathan to have a few words on Polestar with our audience here, as well as West Mali users who are watching us live on YouTube. Nathan, please.
Thank you very much, and good morning, good afternoon, good evening, everyone. It's a pleasure to be with you all today. I'd like to start with just a few words about Polestar and the Polestar brand and a bit of background to us. Let's start with who we are. Polestar, we want to be the guiding star for the automotive industry. The industry is going through rapid change, that rapid shift into electrification, and Polestar, our intent and vision is to be the guiding star. So we are an electric performance brand, and we are determined to improve the society we live in. We have an absolute focus on sustainability, and that's something that is really very much part of Polestar's DNA. But our focus is also on uncompromising design and technology, and that passion and emotion drive us, and electricity and innovation drive our cars. And our products are excellent, efficient, and entertaining. And we like to say in our future, there's no room for shortcuts, excuses, or compromises. We're all in and dedicated on our ambition, and we want to guide our industry forward, as we say, through pure progressive performance. So a bit of background. So the history of Polestar. Polestar was formed in 1996, and originally it was really a racing team, and it raced cars, Volvo cars primarily, as you can see in the picture there, in the World Touring Car Championship. They also had a real focus on developing performance software, and that was enhanced Volvo vehicles under license, and they really built this partnership with Volvo cars. In 2005, Polestar Sign Racing was formed. And then that further developed with the additions of not only performance software, but performance parts and what was then called Polestar Engineered, which was almost track cars. That, of course, became very interesting business. And then Volvo Cars acquired that part of the business, including the Polestar brand, in July of 2015. And that really started a shift into a new Polestar. So that was our focus in reinventing the Polestar brand as a global performance premium electric vehicle brand. And we did that, and as I mentioned, our focus on pure progressive performance. And we launched in 2017 in Shanghai in October of 2017 the Pulsar One, which are our first vehicle. That's produced in a plant that was built by Polestar for the Pulsar One in Chengdu in China. And since then, the brand has grown really quite rapidly. So that was really about our quite rapid expansion. When we launched globally, we launched in 10 markets. So China, US, Canada, and then 7 European markets. I think one of the few brands to launch globally at the outset. And really established the brand very, very quickly. We have a different approach in terms of our go-to-market. So we are direct-to-consumer business model. So we sell directly to end consumers. Digitally, of course, we're a very digital-first brand. So all Polestars are ordered online. And since that time, we've then expanded further into additional markets. So the demand for Polestar is really growing quite quickly. We're now in almost about 20 markets. We're furthering our expansion, of course, our recent announcement of our SPAC going forward. So it's been a very exciting time for Polestar over the last few years. So just a little bit about pure progressive performance and what that means and what we stand for. So pure, the best way to describe that is really the essence. That's the Polestar design language, that clear, cool design language that very, very much represents the untainted beauty of Scandinavian aesthetics. Our CEO, Thomas Ingerlath, is a designer, and naturally we have an absolute focus on design. That's really something that underpins the Polestar brand. We strive to do that, free of contamination, really perfectly in tuned and untarnished, without compromise, very authentic and genuine. Progressive is really another pillar that underpins the Polestar brand, and that's our approach to technology. We cherish technology. We love innovation. That's really something that is very much Polestar. The Polestar 2 was the first car with an Android operating system to be introduced. But in terms of design, with the Polestar design, we define the avant-garde, that very unconventional design, which is something that really underpins and represents Polestar. And then, naturally, the last one being performance. So as I mentioned, we have a history as a racing team, of course. And so that performance, that the vehicle performance, the driving dynamics, the vehicle attributes, all of those things are fundamental to the Polestar brand, and you feel that when you drive a Polestar. But it's more than that. It's really about a mindset. It's our mindset, that continuous improvement that is really comes from a history of being a racing team. You know, that driven to success. You know, it's all about. It's not just about straight line performance for Polestar. It's a very different part. It's something that we bring to the Polestar brand and organization. So first Polestar car out naturally was the Pulsar One, which is our first and only, let's say, premium performance hybrid. This is a very low volume production car with carbon fiber body, but it was really a statement of Polestar and who we are and the position that we want to take as a brand. So you can see there in terms of some of the metrics, not to go into all exhaustive detail, but that's 626 horsepower, 1,000 Newton meters of torque, stunningly beautiful performance GT. Still has the longest range of any plug-in hybrid of 150 kilometers, which is really something that's quite outstanding in that sense. Followed up by the Polestar 2, which was more an entry-level car for Polestar. So it's almost Polestar 1 and Polestar 2 represent almost the two bookends of the brand. Very minimalistic design, but still very sort of powerful stats that you can see with the Polestar 2. So it really still has that very performance attributes that really underpin the Polestar brand. Of course, with the minimalistic design, as I mentioned, the first car with an Android operating system. In China as well, of course, we partner with different tech giants to really bring that sort of immersive digital experience for our consumers. And very proud of the Polestar 2. Actually, I think it's won over 50 awards globally in many different markets, including Car of the Year across many different markets, as you can see there on the screen. In Germany as well, which was really outstanding for being a new brand. I think we established that credibility really quite quickly, which was, of course, something that we're very proud of. So many different awards as well, which is also encouraging, not just from a design standpoint. You can see that the Red Dot winner, best of the best, all of those elements we're very proud of, but of course, with regards to sustainability and safety, importantly as well, from Euro NCAP winning the 5-star safety rating, which was on the 2020 protocols, which of course are even harder than or more stringent than previous years. So we really are delighted with those awards from the Polestar 2. But we also revealed the Polestar Precept. We revealed that at the Geneva Motor Show, and of course, with COVID now, we haven't as many motor shows as we would like. But intent with the Polestar Precept, and the reason it's called the Precept, which means really it's a statement of the future, is to really give people an understanding of what the Polestar brand is and will become, and that really is very representative of our future design language. You can see in the Precept there. Precept, Polestar, we don't do concept cars, so Precept really was a statement of the future, and we have announced that this is the Polestar 5 and is going into production, and we're currently building a facility in China for this car. But it also is a statement of focus on sustainability and all the sustainable material that we put into this car, including things such as B-Comp, which is a natural fiber composite, company that we work with called B-Comp, that allows us to reduce the amount of virgin plastics in the car by between 80 to 85%, which is really something quite important. And of course, going forward, our focus on technology. This car will have, absolutely industry-leading HMI. And we did tease, what will be our next car, Polestar 3, and this will be launched this year, which is very exciting for us, which is a very aerodynamic, electric SUV, as you would expect. And we have teased a few images. So here you can see a shot with the camouflaged Polestar 3, and will be coming out this year. I can't unfortunately reveal the exact date to you all, but we are very excited, naturally, that this car will be coming out this year, which will then, of course, start to lead and you'll start to see, the future Polestar lineup. As you can see there, the 1, 2, 3, 4, and 5 under the silks, which is really, all of our future models coming together. And it's basically a car every year going forward for the next few years. Polestar, we have a global presence. So for being a new brand, just over 4 years old, I think we have we were if not one of the only new energy vehicle brands that has truly a global footprint. So our head office is in Gothenburg in Sweden. We have a large R&D center in the UK in Coventry with over 300 engineers. Of course, production facilities in China. All cars at the moment are produced in China, Chengdu, Taizhou, and we're in the process of building another plant. Polestar's intent to become a climate neutral company and to do that by 2040. We've also made statements which I'll touch on in more detail, but we want to be the first brand to produce a climate neutral car, which we call our Project Zero, and to do that by 2030, which is really quite a complex task. But transparency as well. We believe you cannot have or reach climate neutrality without transparency. Consumers also expect, I think, from many brands to be transparent in their statements about sustainability. How are they going to achieve these very bold ambitions that many people talk about? But also circularity, that is, the circular economy, how we recycle and reuse material, that of course supports our progression towards climate neutrality, and inclusion. We're a very inclusive brand, and that's fundamental to who we are. So in terms of transparency, we publish our life cycle assessment. So that really basically, this chart that you can see on the screen here is how much carbon it takes to produce a Polestar 2. And we have a number of different variants. You can see there a dual motor variant and a single motor long range and single motor standard range variant. And that range is between 25 and 27 tons. So when it leaves the factory gate, that's how much carbon that the production process has consumed at that point. And then depending on the energy mix that consumers use to charge the car and the markets in which they're located, that use of carbon over or consumption of carbon over its life cycle will increase to a certain point. If it's on pure renewable energy, such as say wind or hydropower, it will maybe remain at the 25 to 27 tons. Depending on the market, the energy mix, whether it's from the European Union or global, that will increase to a certain amount. The difference is with a combustion engine, an equivalent combustion engine, that would consume 58 tons of carbon during its life cycle. So I think the important point here is that, yes, in all honesty and being very transparent, electric vehicles can and do consume more carbon in the production process than combustion engines, but during its life cycle will consume less. So it really is a path to climate neutrality driving electric vehicles. The energy mix, of course, is important. Our task now is to bring those grey bars down to zero, and that's really part of our Project Zero. And that's also why then we use a lot of sustainable material in our cars. So this is a picture of the interior of the Polestar Precept or the Polestar 5. And I mentioned the B-Comps natural fiber composite, allowing us to reduce virgin plastics by between 80 and 85%. Additional recycled materials that we use recycled PET bottles with 3D knitting to produce the seats. Also cork to produce the back of the seats as well, recycled cork, recycled fishing nets, using the Econil from recycled fishing nets to produce floor mats, etc., to really help us towards our path towards being able to produce a climate neutral car, but also Polestar becoming a climate neutral company. And that's really Project Zero. So this is a hugely ambitious task. We do call it our moonshot goal because it means working with all of our suppliers across the entire supply chain in order to be able to produce that car from, when it leaves the factory gate with a zero carbon footprint. Importantly, to do that without carbon offsetting. That really adds a complexity to our task. But we are, as I say in our mission statement, we are all in and dedicated in our ambition and really determined to make this happen. So that's very exciting. That project is up and running now. It's under the leadership of a person who's very well known within automotive, within electrification, Hans Forshaw. The project team's in place and really now actively working with all of our suppliers to start to make this happen. But not only that, the Polestar Precept, which is becoming the Polestar 5, has won a number of prestigious design awards recently, really meaning that sustainability does not have to mean any compromise on design. And that is, of course, very important for Polestar being a design-led brand. Our attention to detail and those aesthetics, of course, are really fundamental to who we are. So exciting times for us and really exciting times for the industry. Lots of change ongoing. And thank you all for listening.
Yes, thank you very much, Nathan. This is very impressive. Actually, many of the early local reviews also praise the car's luxury design, as well as its incredible driving performance. And considering how new Polestar is to the new electric segment, this is really quite an achievement. And okay, with that, let's kick off the panel discussion with all the guest speakers we have here and listen to their thoughts on the Industrial Revolution. There's no doubt that the electric cars are getting better, cheaper, and more popular. The actual hurdle in the transition from oil to electric is actually the charging infrastructure. So I think before we explore the future, it's important to understand where we are at the moment. And what do you think have been some of the big trends in mobility, EV, and the ways of getting around? Yeah, maybe shall we start with you, Mr. Cowan?
Yeah, sure, Shiqi. I think in terms, personally speaking, I would say that the most prominent trend in mobility today is really personal mobility. So, I think, the mobile phone and internet connectivity, they have been major drivers of personal mobility. Let's just look at the ways we use our phones. And really people today are less constrained by physical space and even location. In the space of, EVs and transport, I would say the key thing here is that transportation has become quite commoditized. It needs to become more efficient, more intelligent, with a greater focus on, the travel experience. And I think we can definitely achieve that with EVs and electric vehicles. This wasn't really possible in the past, but increasingly it's becoming a reality with the advancements, I would say, in the internet, in telecommunication technology, and even in artificial intelligence.
Yes, thank you very much, Calvin. Actually, we also noticed that under the Singapore Green Plan 2030, we also have a comprehensive EV roadmap to ramp up our efforts for EV adoption. And with that advancement of EV technology, we do expect that the cost of buying an EV and ICE vehicles to be similar by the mid-2020s. The electric car industry differs from the traditional automotive industry because it's so new. Until recently, very few companies manufacture any kind of electric vehicle. But you look at now, every single major automakers in the world is developing or producing an EV. So with increasing competition in the electric vehicle space, let's turn the mic to Mr. Nathan. In your view, what are the key features, aside from cost, do you think the consumers should prioritize when they're choosing one EV over another?
Well, thank you. I think as you mentioned, I mean, the proliferation now of EV vehicles and brands, new brands producing EVs has just exploded. I think we've really seen that exponential shift now into electrification, and they've truly become sort of mainstream products now. In the past, I think consumers were a little bit more concerned with range and charging. There was what we'd call range anxiety and charging anxiety. That was concerned about sort of battery range, and of course with the absence or the lack of infrastructure, the charging anxiety that would come with that. I think most brands now and products have sort of really overcome certainly the range anxiety. Most cars are now being produced with ranges over 500 kilometers, which I think is really quite significant and a great step forward, I think, for the industry as well. Most people certainly don't consume that much range or drive those types of distances on their, certainly not their daily commute or even their weekly commute. And as the industry adapts, with this acceleration into electrification, I think we've seen, charging infrastructure certainly develop in many markets very, very quickly with a combination of faster and sort of slower charging. So AC/DC chargers, which is great to see, and that's really fundamental for our industry to really accelerate that adaptation of electric vehicles. And it is a little bit of a different in terms of sort of consumer behavior now adapting to electric vehicles, because it's not like ICE or combustion engines where you go put fuel in the car maybe once a week. It's more consumer behavior where you regularly sort of top up your electric vehicle when you park, at work or home or wherever you happen to be shopping. You sort of plug it in and you maintain a certain charge. So I think as an industry, we've really overcome those two key hurdles, range and charging anxiety. Now, as you mentioned, with so many new brands, all of these brands are starting to establish a position in the market, and appeal to different consumers and different customer segments in different ways. And then the other interesting development, I think, is that we have the combination of new brands and established brands with their electric powertrain and their offerings, and that differs in different markets, and of course appeals to consumers in different ways. So now I think we're starting to see consumers be much more selective in their choice of electric vehicles, what really becomes important to them. So as I say, it's not just cost, because the cost between an electric vehicle and a combustion engine is now starting to align. So certainly coming down in that sense. And the total cost of ownership is being far better understood now, I think, which is excellent. So this is then when key features and factors become important to different customer types. So design can, of course, be a very important consideration for some. The aesthetics of the car and what the brand represents can be very important as well. So design language, I think, appeals to many customers in a different way, especially with passenger vehicles. That's something that really, and it's very personal. It can be very subjective, but certain design language appeals to different customers. Then I think with electric vehicles, especially, technology is also something that is very important.
Mm-hmm.
And not just the use of components and so on, but that's more that seamless integration into your digital life. We're all very connected now, and that use of technology and how that enhances your lifestyle as an individual and makes that sort of seamless transition is increasingly important. Plus all the other features around, autonomous drive and all those other technological developments that are, accelerating rapidly, still not quite there yet, but sort of certainly becoming much more advanced and being released progressively. People are now starting to make those active choices. And I think it becomes the combination of all of those elements for different consumers, which will dictate their choice of electric vehicle. How you start to package design, technology, quality, safety, all of those things are, of course, very important components, as they were with combustion engines. But now with this brand proliferation, I think, and the vast amount of choice to consumers, they're becoming much more selective,
Yes,
which is great for us.
Okay. And then we do notice that from the local EV lovers, there are half of them, they will focus on Tesla, on the more eye-catching speed. But Polestar actually concentrates on building quality and also the ownership experience. And that doesn't mean that Polestar is slow. And actually, the long-range dual electric motor variants, they can complete the century sprints in 4.7 seconds and also have a super long range of 480 kilometers. And as Nathan mentioned just now, we also see that the traditional automakers are trying to gain market share in the EV space as well by transitioning to produce EVs. And many research have called for traditional automakers to become more flexible and innovative or risk losing out in the game. Yeah, so what are your thoughts on that, Mr. Calvin or Mr. Neeraj, from the consumer or researcher's perspective?
Thanks, Shiqi. So I think between Calvin and Nathan, they have covered all the points. What we see from research perspective, how the landscape is changing, is that in addition to the fact that consumers are demanding more sophisticated and newer EV products, we also see that because countries have committed to NDCs, the decarbonization commitments, and working towards climate neutrality or carbon neutrality, there is also a regulatory kind of, if you will, a tailwind in different countries where they're trying to transition their technology mix and nudging their automakers to change the product mix from ICE-based vehicles to EVs. And that is happening all across different geographies. I'm in India, and in the recent times, there has been a very strong push from Indian government to change the mix of vehicles from just predominantly ICE to ICE plus EV.
Okay, thanks very much, Mr. Neeraj. And the EV makers can compete very well with the traditional automakers for the EV market share. So that actually makes it more difficult to discern which companies will eventually dominate the electric car market. And that uncertainty makes investing in this electric car industry riskier than adding the portfolio exposure to the automotive industry as a whole. Yeah, so before we move into the next section, green investing, I think let's clarify an important and controversial topic with the industry expert here. Yeah, so as EVs becoming more popular, some are actually questioning whether they are really green and energy saving compared to a traditional vehicle. And if yes, how much green we're talking about? Because there has been research saying that producing EVs actually lead to significantly more emissions than producing petrol cars. Mr. Nathan, would you like to share with us on this?
Yes, of course. And that is, at the moment, that is the reality. We're quite transparent about that. Producing an electric vehicle does consume more carbon during its production process than a traditional combustion engine. That's true, primarily due to the battery that consumes 29% of the carbon in the production process. However, as I mentioned before, during the life cycle of the vehicle, it will consume less carbon than a combustion engine. So it really is, at the moment, the only path to climate neutrality. And our task now in the industry as a whole, and we are very, very much focused on that, is really reducing the amount of carbon that is consumed during the production process down to zero. So yes, and that's why, and I'll stress and emphasize, transparency is fundamental. Consumers really demand transparency from the auto industry. Not every consumer is, many consumers, 60% of consumers don't believe the auto industry is truly striving towards their sustainable goals and visions that they state. And that's why, I think as an industry, we have to be transparent. We at Polestar are still the only brand that publishes our life cycle assessment. It is complex. But consumers do demand this. So it is a fact that, yes, an electric vehicle can consume more carbon during the production process. But in terms of becoming green and moving towards climate neutrality, that is the path towards climate neutrality. And we as an industry are focused on reducing the amount of carbon consumed. Plus, as well, when you now start to get many countries through their respective governments coming out with policies towards climate neutrality, and industry adapting and shifting towards more renewable energy, which will of course improve when you improve the energy mix and the types of energy used to charge electric vehicles, that will all start to reduce the amount of carbon that is consumed during the process. So it absolutely is the path forward, but we need to recognize that Electric vehicles is not the end game, it's just the starting point. That's really the starting point for us. We have to move towards climate neutrality.
Yeah, thank you very much for the clarification, Nathan. And in Singapore, where most of our power is generated from the natural gas, but we can be more sustainable by switching from petrol cars to EVs. As an EV emits only half of the amounts of CO2 as compared to a similar vehicle powered by ICE. If all our light vehicles can run on electricity, we can actually reduce carbon emissions by 1.5 or 2 million tons. That's about 4% of the total national emissions. With ESG or green investing has gained bigger tractions among both institutions and retail space, we saw that on the 20th of January, last Thursday, Nikko Asset Management listed the Nikko EM Street Trading, MSCI China Electric Vehicles, and the Future Mobility ETF. It's very long. So in short, Evfm, which is the very first SGX-listed ETF to offer investors access to these Chinese companies that are expected to have huge revenues from EV, energy storage, autonomous vehicles, shared mobility, and new transportation methods. And this fund aims to achieve long-term capital growth by replicating the returns of the MSCI China All Shares IMI Future Mobility Top 50 Index. So, Mr. Calvin, you are representing the fund issuer Nikko Asset Management here. Could you please share with us that for this ETF, why did you focus on China rather than the rest of the global Evfm markets? What do you see the opportunities over there?
Yeah, sure, Shiqi. I think generally we believe China equities will outperform the US equity markets, and for a few good reasons. First of all, China is moderatingly easing in terms of policy wise, whereas the US is tightening, doing QT. And of course, also in the US, we are seeing rising yields, we are seeing higher interest rates, and to a certain extent, valuations in the US equity markets are also quite rich relative to its own history. So in contrast, we're seeing good earnings growth potential in China, especially in the Evfm space, and so we are really quite excited in terms of the investment opportunities that are being presented in the China Evfm space.
Okay, thank you, Calvin. As you mentioned about China policies, what other key factors, including policies, are driving the China electric vehicle and the future mobility sector?
Sure. As this slide shows, there are really four reasons why we are so excited about the China Evfm space. I think number one is really the policy tailwinds. The Beijing government is very supportive of the Evfm space. I think there are two major policies that was released, I think back in 2020. One was the State Council Blueprint, which was highlighted that electric vehicle sales should be about 25% of total EV sales. Total car sales by the year 2025. So that kind of lends support to the industry. I think we also have the 14 5-year plan, which also highlighted that new energy vehicles will be one of China's strategic emerging industries. So a lot of support from a policy level, which is really, really important in an emerging technology sector like Evfm. I think number two is really demand. This is probably less well known, but Chinese consumers have proven to be a lot more receptive to new technologies. We have seen that, in handphones. We have seen that, in payments, and definitely it is a very interesting and big market for potential mass adoption of electric vehicles. Number three is really on the supply side of things. So China does have supply side leadership. I think I would just want to emphasize on that. For those of you who are unaware, China does account for almost 1/3 of global manufacturing value. It is essentially just a manufacturing powerhouse. And right now we are seeing very established and deep supply chains, within the China Evfm space, and that's going to be very critical in supporting the growth in the entire sector. And I'll just end off with the fourth point that really, specific to the ETF that we just listed on the Singapore Exchange, really investing in the electric vehicle space is not just about a car. It is really about investing in the future of the mobility space. And I think in terms of that, maybe I can pass it on to Neeraj from MSCI. Thanks Neeraj for joining me on this one. So Neeraj from MSCI is really the index provider for our ETF, and really a lot of the investment thinking and index design is really riding on what MSCI came up with. And I'll let Neeraj perhaps elaborate a little bit more on that front.
Sure, Calvin. Yeah, Amara, can we go to the next slide? Yep. So exactly like we've discussed about what is happening in the EV space, how mobility is going to change in future, and what I will talk here about is that how do you basically solve the investment problem around it. So it is when we talk about EVs, we know the big brands which make electric vehicles, or the Chinese suppliers which make the batteries. But from an investment process point of view, it is important to map the entire landscape. And once we map the entire landscape, then we try to identify companies which are trying to solve problems or selling products and services at different places in that landscape. So this future mobility index at MSCI, it is part of a range of MSCI indexes which we call thematic indexes. And we're taking example of future mobility here. So we start with one investment objective. We say, okay, what are the companies which are involved through their business, through their product and services to benefit from the way mobility is going to change in coming future. Now, electric vehicles is just one part of this this whole transition in mobility that we are witnessing and that we will witness going forward. So once we start from that kind of place, we quickly identify that electric vehicle is a key part. But to power that electric vehicle, we have to build a whole value chain or infrastructure for batteries. And once you look at batteries, then battery is not just the battery pack that is going into the car, but it starts from companies which are innovating battery technology, the miners, lithium miners, the companies which are making batteries. There will be companies which will recycle batteries. And then at the end of that battery value chain is a EV which is going to consume battery. Right? So this is how we think about a theme. We start with future mobility, we break future mobility in one of the components like battery, and we try to map out the entire value chain of battery. Similarly, here you see smart mobility, sharing economy, high-speed transportation, vehicle automation. So these are the other kind of trends or sub-trends, if you will, which are going to shape the future of mobility. And what we mean by these things. So EVs, like I said, are not the only thing that is changing the mobility landscape. If you look at smart mobility, then comes in companies which are working towards providing driverless cars, mobility as a service, multimodal commute, multimodal mobility, and vehicle-to-vehicle communication. So, I mean, this whole EV car industry has really actually given a fillip to vehicle-to-vehicle communication and technological innovations in car. So that is what we try to capture through smart mobility. Then the third sub-theme here or sub-trend here is sharing economy. So cars are going to be shared. We know that there are now car riding apps, and car sharing companies. So as cars become driverless, autonomous, this sharing will only going to increase. And that is also going to be one of the major trends for mobility in future. Then the second last on the slide is high-speed transportation. It is related to how do people move from one place to other while using, shared mobility, smart mobility, but still at a very, very high speed. And as you look a little bit closely into high-speed transportation, we look at some of the key characteristics of high-speed transportation, which is currently underway in the area of hydrogen vehicles, creating vehicle grids, automating highways, and so on. And the last trend here you see is the vehicle automation. So all of this is going to see a lot of automation. So cars or any mobility vehicle is really going to become automated. And what are the kind of key trends in vehicle automation? So we see a lot of development companies which are coming with projects for example, parking apps and sensors, automating different technological components of a vehicle, again, autonomous driving, connected vehicle, and intelligent traffic control. So this is what at MSCI we do for a thematic index. We start with a big theme like future mobility, break it into smaller components of those themes, and then we try to map those smaller components or sub-themes in a very value chain like frame. So when we construct the future mobility index, we are going to look at all companies which have, through their product and services are exposed to any of these sub-themes or any of the key concepts which are underlying each of the sub-themes. So that is the whole kind of focus of the quantitative process of stock selection, is to look at companies which are exposed to any of these activities. Right. So ultimately, I mean, what do we do with all the theme definition and mapping the theme and value chain and landscape? So we use a process, an algorithm, which is published in our index methodology document, using which we can capture a company's exposure to any of the business activities that I was discussing on the previous slide. And we capture that company's exposure to that business activity, and we quantify it using a rules-based methodology. So the purpose of that quantification is to provide an economic metric or economic assessment of companies' exposure to any of the activities that I spoke about on the last slide. So, for example, how much of company's business is really dependent on sale of electric vehicles, or is the company completely leveraged to creating batteries, or is the company maybe 50% of its business is dependent on manufacturing batteries, but 50% of its business is dependent on some other business activity. So that kind of economic linkage we try to assess and calculate for every company in our investment universe. So following that rules-based methodology, we'll arrive at an exposure for every company, and using that we can select companies in our indexes. The other kind of key feature of this product is that we have the ability to evaluate companies globally, so it is not restricted by just one geography or one region. So any electric vehicle company or any company involved with future mobility anywhere in the world, we will be able to assess its exposure. And the fourth key feature of our framework is that while we at MSCI, we do the quantitative research part, we do consult and take advice from our thematic experts. So we have a future mobility expert called Mr. Lucas Neckerman. And the theme expert is like a consultant who helps us basically fine tune, the definition of the theme. So all the key trends which are shaping future mobility, they are not developed like in silo, but they are developed after taking consultative advice from our theme experts. So this is why we have a lot of kind of confidence in the way we develop our theme. That we are capturing the key trends, we're capturing the right set of companies, and the theme itself and its definition will continue to evolve going forward as more and more technologies emerge, which are going to impact future mobility. Next slide, Amanda. Right. So how do we finally create this China All Shares IMI Future Mobility Top 50 Index? It's a very simple, objective, and transparent methodology. So we start with an investment universe, which in this case is the MSCI China All Shares IMI Index. It includes all stocks which are listed in China or in US or anywhere where the company is domiciled in China. So we look at all that entire universe of around 3,000 companies. We look at every company and try to find out if this company has a exposure, and we can quantify that exposure to the theme of future mobility. That quantified metric is between 0% and 100%. So select companies which have more than 25% exposure. We want to only invest in liquid companies in this index. So there is a liquidity screen where we exclude companies if their 3-month liquidity is below a certain threshold. And then from this universe of companies where every company has more than 25% exposure on a scale of 0 to 100%, more than 25% exposure to the theme of future mobility, and is liquid enough to be considered for inclusion in the index, we take that set of stocks and then we select the top 50 companies by their market capitalization. So in a way, you can think of this index as an index of large cap companies, which are all key players or are leveraged or exposed to the way mobility is going to change in future. So which is why we call it future mobility. And after selecting those 50 stocks, those stocks have to be weighted in a portfolio. I mean, meaning how much capital you are going to allocate to each of the stocks. So the weight of every stock is a function of what is the market capitalization or size of the company in the market, and also what is its exposure to future mobility. Is it 100% exposed to future mobility, or it is 25% exposed to future mobility? So the weight decision is a function of both size and company exposure to future mobility. And the last step is that if a company ends up with a weight of more than 10%, which can lead to concentration risk in the portfolio, so we cap the maximum weight of a company in the index at 10%. So not one single company or stock cannot hold more than 10%. Of the index. So that is in nutshell how we construct this the IMI Future Mobility Top 50 Index. So Calvin, it's back to you.
Calvin, are you muted?
Yes, sorry for that. So I'm here. Thank you so much, Neeraj, for kind of explaining a little bit about how MSCI chooses the 50 Chinese Evfm companies that goes into the index, which our ETF tracks. I think that's going to be helpful for some of the listeners here to understand the index methodology.
Yes, thank you very much, Neeraj, for the deep dive into the underlying index. And finally, for our investors tuning in, Mr. Calvin, what are the catalysts or risks that they should be aware of when they invest in such industry?
Yeah, sure, Shiqi. So I guess briefly, the China Evfm space is running on good momentum, right? I think since mid last year, and within the physical market itself, I think sales numbers was quite good. 2021 EV sales numbers in China was about close to 3 million cars, and that's pretty substantial. The important thing here from an investment perspective is whether or not sustained sales growth can continue. I think that's very important. I think investors will want to follow that quite closely. I would say the immediate risk is really watching how the slowdown in the housing credit market as well as the internet sector might weigh down on consumer spending. Right, as I mentioned, the catalyst for the sector is really sustained sales growth, and if consumer spending gets weighed down, I think that will impact the investment the sector overall. Looking at the mid to long term catalysts, I would really say that it's the export potential of the China EV companies. A little bit like what Polestar is doing, kind of selling into various markets as quickly as you can, and really, I personally speaking, I think a big export destination for China EV companies is really ASEAN. And just kind of taking Singapore as an example, I'm not sure if you guys are aware, there are about 500,000 passenger cars in Singapore. 500,000 passenger cars. In terms of number of EVs that are driving on our roads today, that's about 1,000. So those are real numbers, to give you a sense. And like you said, Shiqi, I think over the next 10 to 20 years, there will be a transition from ICEs to EVs for all cars on Singapore roads. So definitely that is something that is already in motion. So for those of you who are not aware, don't let it hit you. It's not just about the cars. I think a lot of EV component makers, batteries, electronics manufacturers, they will all benefit from this trend. So I would just say that the elephant in the room is really exports into the US and European markets. And I would say this is quite specific to Chinese companies. On that front, they've faced quite a lot of competition as well as regulatory hurdles. So those are some of the risks that we constantly look at.
Okay, thank you very much, Calvin, Nathan, and Neeraj, for this insightful sharing. I know that you're all industrial experts, so this conversation could never end. But in the interest of time, let's now move on to Q&A. We have actually received many meaningful questions from our audience here, as well as on the West Money platform. So I will pick the right one to each of you. The first one is for Nathan. Yeah, so what's your take on the semiconductors shortage? And do you see there any major impact on the EV production, given the fact that these semiconductors are getting their materials at premium at this moment due to the supply chain issue and inflation? And how has this affecting Polestar production?
Well, thank you. Good question. I think globally, I think many industries have been affected by the semiconductor challenge and some constraints with the supply chain. That's been addressed, I think, very well, and certainly we see that is improving. It's not without its challenges, of course. We at Polestar really haven't been impacted by that to any significant extent. So at the moment, I think that has any material impact on our production going forward. Of course, we monitor that very closely. But naturally, yes, it is a challenge for the globe, but I think we see certain improvements now from a supply chain standpoint and the supply chain efficiency. So that should, in our assessment, continue.
Okay, cool. Then when do you expect Polestar to expand into rest of the Asia Pacific markets in 2022, like Southeast Asia, like Malaysia, Indonesia? When would you expect that?
Well, all of those markets are currently under investigation for our expansion, and we've said we are continuing to expand into additional markets, and we're just evaluating those as we speak. So I can't sort of go into details as to the sequence of our expansion, but certainly it's exciting times. And as I think the panel has mentioned as well, this part of the world, the ASEAN part of the world, I think we see certainly significant potential for the Polestar brand and EVs in general.
Okay, looking forward to that. And thank you, Nathan. And now we have received this very sharp question from one of the West Money user, New Trending, for Mr. Calvin. So what are the top names that you expect to be taking significant market share within the EV space in China by 2025?
Well, the intuitive answer to that is really the Chinese names. If you're operating in China, definitely there will be one or two Chinese champions. The problem now is that there are too many Chinese companies, in my personal view. Too many Chinese car companies operating, not just domestic car companies, but also joint venture companies, foreign companies. They all want a piece of the pie. So I think there might be some consolidation that will happen in the Chinese EV market, EV manufacturer market at some point, right? And as to who will emerge, the winner, it remains to be seen, but definitely the winners will become bigger, right? So I'm generally quite optimistic, on the China Evfm markets.
Okay, thank you, Calvin. And there's another question regarding our fund. So what will happen with dividends in case any of the company is paying dividends in the portfolio?
Oh, sure. So sorry, this is a technical question, but it's a very simple one. Currently, the ETF, the fund does not pay dividends, and whatever dividends that the underlying companies in the fund pays will accrue to the net asset value of the fund, which means that the net asset value will just trade higher over time. So it does not disadvantage investors.
I see. Okay, thank you, Mr. Calvin. And this one is more relevant for Mr. Neeraj from the research perspective. So do you think the autonomous vehicles and the potential for robot taxi is going to be related, directly or indirectly, with what companies will have an edge in the EV race?
Right. I think this is a very topical question. So I think two things are happening. One is that what the companies are doing, and it seems that there is a lot of excitement in this area, where not only the bigger players but even smaller players are coming up with technologies and products to make robo taxis happen. But when we look at the listed kind of equity universe, because ultimately, as an investment problem for an index, we have to restrict ourselves to the listed equity. We still do not see a lot of big listed companies which are leveraged or which are exposed to, how should I say, just the development of robo taxis or the technological backend for those robo taxis. So while as I would say as an industry, there is a lot of excitement, it is still, we do not see a lot of listed opportunities to pick in index.
Yeah, and Shiqi, I think I would just add on to what Neeraj have to say.
Yes.
From an investment perspective, that's why we tell clients that when you want to gain exposure into an emerging technology sector or industry, it makes the most sense to hold onto a basket, because then that way you get the maximum exposure. Every company is trying to develop a component or an element of what is going to be the future. But in order for you to benefit from that future, you really need to own all the companies at the same time. So this is really where the ETF comes in.
Yes, absolutely. Thanks very much for the add-ons, Mr. Colin. And the last question from Mr. Nathan. I also want to ask this question on behalf of many investors in Polestar. So when can we expect the IPO of Polestar this year? What is the current status?
It's a good question, and I do receive that question a lot, and I'm afraid I can't go into the details there, but suffice to say, we're very excited about the future.
Okay. Okay. All right. Then thank you once again, Mr. Nathan, Colin, and Neeraj, for this informative session and valuable answers. We're now coming to the end of the event, and I also want to thank all the audience for your questions and active participation. Yeah, so we hope that you can find today's sharing useful when it comes to making your future investments. So if you want to invest in the fund, simply key in EVS or EVD on the platform to look for the Nikko Evfm ETF. And if you want to book a Polestar 2 test drive, simply scan the QR code on your screen. And the recording for this session will be available in 3 days' time on all Saxo digital channels and will be sent to your mailbox before end of the week. Okay, so if you have any calls, inquiries on the Nikko ETF or to book a test drive, feel free to drop us an email at ps@saxomarkets.com. And with this, I think we will end today's session. I want to thank you once again for all the panelists for attending the event today, and thank you everyone for listening and spending the time with us tonight. Okay, so thank you everyone. Have a good night. I will see you next time.
Thank you.
Thank you.